Hello, and welcome to today's webinar. My name is Elliot, your WebEx producer, and I'll be in the background answering any WebEx technical questions. We have a few housekeeping items before we get started. If you experience technical difficulties, please send a message to the WebEx producer using the Q&A panel. You may also dial 1-866-779-3239 and receive technical support assistance. During the presentation, all participants will remain in listen-only mode, and as a reminder, this event is being recorded for a broadcast. We encourage you to submit written questions at any time during the presentation using the Q&A panel at the bottom right of your screen. Please type your questions into the text field and hit send. Please keep the drop down as all panelists. With that, we invite you to sit back, relax, enjoy today's presentation. I would now like to introduce your first speaker for today. Alan, you have the floor.
Thank you, Elliot. Hi, this is Alan House. I'm a senior analyst here at Value Line. I'm joined today by two other senior analysts, Sharif Abdu and Charles Moran. We here at Value Line hope you and your family are staying safe and dealing with this difficult time as best as possible. Today, we are going to provide an update on the coronavirus and its ongoing impact on the economy and stock market. We will also discuss the actions Value Line is taking to help our subscribers navigate this difficult time. We will then recommend one stock to buy right now, and finally, answer any questions you may have. Please note this presentation will be available on our website. That's www.valueline.com, and on our YouTube channel within the next 48 hours. All previous webinars are also posted. Before I start the presentation, for those joining us for the first time, I want to provide a brief overview of who we are at Value Line. We are a New York headquartered corporation that has been providing investment research for more than 85 years. Our flagship product is the Value Line Investment Survey. This service is a unique source of financial information and is designed to help investors make informed investment decisions that fit their individual goals and levels of risk. The product includes data, information, and analysis on more than 1,700 equities that trade on the New York Stock Exchange, the NASDAQ, and the Toronto Stock Exchange. It also includes economic commentary, easy-to-follow model portfolios, stock screens, industry-based analysis, and much more. This service, which is published weekly, is created by Value Line's research team, which is comprised of more than 70 analysts, economists, data experts, and quantitative specialists. One thing I want to stress is that our research is completely unbiased and independent. Unlike many Wall Street brokerage firms, Value Line has no investment banking business with any company, including the 1,700 that are included in this service. Value Line does not execute trades for its subscribers and therefore has no vested interest in whether our subscribers buy, sell, or hold a specific equity. Furthermore, our staff of professional securities analysts are not permitted to own shares of any companies they cover. If you have any questions about the products or services we offer or our different tiers of subscriptions, that information can be found that information can be found at valueline.com, or you can call 1-800-VALUE-LINE. Now let's discuss the coronavirus, the economy, and the stock market. This content was prepared by Harvey Katz, Value Line's chief economist. Inflation is heating up, with the consumer and producer price indexes surging by 0.6% and 0.8% respectively in May. Worse still, prices were up 5% and 6.6% in the latest 12 months, the former of which was the biggest uptick since August of 2008, when the U.S. economy was in free fall. In all, inflation has been trending higher since January. The principal contributors to these firming prices have been gasoline, airline tickets, hotels, and used cars, with such vehicles demand and prices pulled up in part by the shortages of computer chips that have restricted production of new vehicles. Are these pricing pressures transitory or something more persistent? That's uncertain at this point, although given Wall Street's continuing resilience and the recent decline in Treasury yields, investors would seem to be in agreement with the Fed in sensing that we either are at or near a peak in inflation. We think the next few months will be pivotal as new economic and inflation reports are issued. Should the lead bank be proven correct and the recent upward spike in inflation soon taper off, the bull market likely would continue. If a more sustained rise in inflation ensues, stocks may come under pressure. Meanwhile, the economy is pressing ahead despite scattered shortages, with recent data showing gains in exports led by civilian aircraft and industrial materials, a decline in weekly jobless filings to another pandemic low, a rebound in consumer sentiment, and rising industrial production. Such strength should help produce a solid rate of GDP growth this quarter. The second half business prospects seem more ill-defined, owing to a less certain inflation outlook. For now, assuming price trends just modestly higher, and if that keeps interest rates steady, GDP growth could hold close to the first quarter's 6.4%. As noted, the stock market continues to give a good account of itself, with the S&P 500 index hitting further all-time highs. As with the economy, Wall Street's second half outcome will depend heavily on inflation and the Fed's reaction to these price trends. For now, the economic and profit fundamentals appear strong enough for most investors to stay fairly well committed to stocks. I want to focus on the conclusion to Harvey's economic view, and I quote, "For now, the economic and profit fundamentals appear strong enough for most investors to stay fairly well committed to stocks." This has long been Value Line's perspective that equity should be a core component of a well-rounded, well-diversified portfolio in good economic times or less favorable times, in bull markets or bear markets. Equity should be a core holding in investment portfolios of all stripes. On that note, Value Line is providing a great deal of information and analysis to help subscribers. We know that most of our users depend on our weekly stock reports, time-tested ranking systems, and other valuable service. In addition, Value Line provides a great deal of daily content that can help you avoid the pitfalls and profit during this volatile time in the stock market. Every business day, senior members of Value Line's research department review the most actively traded stocks, company press releases, news stories, trade periodicals, and other sources for data and information that may change our view and investment recommendations for specific stocks. When something noteworthy crosses our desk, we immediately publish a supplementary report that outlines the new information and, importantly, what it means for the stock and shareholders, pardon me. This content is posted throughout the day on our website. Again, that's www.valueline.com. Okay, we will now show you how to access it. Once signed in, head to the dashboard where Sharif is already located. This is the main landing page for subscribers. Under the links, click on Supplementary Reports. As you can see, the research department has been very busy publishing our updated thoughts on the stocks that we track. We strongly suggest that subscribers visit this page often. We are also aggressively adjusting our financial strength grades. Although the economy is generally heading in the right direction, individual companies are still dealing with reduced demand for their offerings and supply chain problems, among other issues. Consequently, corporations have been implementing cash-saving initiatives such as headcount cuts, the slashing of advertising budgets, and the adjusting of dividends. Taking on additional debt has also been popular as a means to build cash reserves. Taking all these factors into account, Value Line has been reviewing and altering our proprietary financial strength grades for the stocks in our coverage universe. These changes are posted on a regular basis in our Selection and Opinion newsletter. For those of you that don't know, financial strength, along with price stability, another proprietary Value Line measure, are the two metrics that are used to calculate a stock safety rank, a key measure of risk. When considering a new stock to invest in, we strongly suggest that you utilize financial strength and safety in your decision-making process. For more information in regard to our proprietary ranks and ratings, Value Line provides a user guide that can be accessed via the investment education section of our website. Lastly, this is a good time to mention the case for individual stocks is quite strong over broad-based index funds. Certainly, particular industries and sectors will recover more quickly than others during and after this pandemic runs its course. Okay, now we're going to get into the screener, which is the one stock to buy right now. For this, let's go to the screener. Value Line subscribers have access to 15 preset screens and 50 fields. I should also mention that another 100 or so fields are available, but it requires a higher level of subscription. If this interests you, please call 1-800-VALUE LINE. Okay, our objective today is to identify one stock that has the potential for aggressive growth based on our forward-looking projections. The first group we want to look at is 5-year sales growth of 25% or better. We want to focus on those companies that can drive top-line growth better than the competition. A 5-year window is a good time span, as it may also include some less than ideal times. We will now run the screen for companies with a 5-year sales growth of 25% or better. There are roughly 5,700 stocks in our database, and after Sharif runs this screen, I'll just give him a second here. So after he runs this screen, we should be down to 188 stocks, and yep, we are at 188. So we've gone from 5,700 down to 188 already. That's a good start. We want to go above and beyond that. We want to emphasize stocks that have above average earnings growth also over the 5-year period. So for our next screen, we're going to look at earnings per share growth over the 5-year period of at least 25% as well. So Sharif's going to run that screen, and now we're down to, we should be down to, yes, 22 stocks remaining. So we've whittled it down now from like 5,700 to 188 to 22. So we're getting there. We're getting where we need to be. So for the last screen, we'd like to focus on companies that have solid finances. Hence, we will look at for companies with a financial strength rating of A or better. After conducting this screen, we are now down to should have 5 stocks left, because we're getting A, A+, and A++. Yes, and we do. So as you can see, if Sharif would please scroll down a little bit, we should have, yes, we do. We have 5 stocks left there. Many of them are household names, as you can see. You can make a solid argument for any of our remaining stocks, and investors interested in adding new positions should consider any of them. However, only one can be today's one stock to buy right now. And after consulting with a number of our senior analysts, we prefer and recommend Amazon, symbol AMZN. Before we click on Amazon, please note that the screens can be saved and revisited by utilizing the created save screen button at the top, as Sharif just showed you. Now let's click on the Amazon report and get some additional information from Value Line's digital report. Okay, Amazon.com engages in the provision of online retail shopping services. It operates through the following business segments: North America, International, and Amazon Web Services, also known as AWS. The North American segment includes retail sales of consumer products and subscriptions through North American-focused websites, such as Amazon.com and Amazon.ca. The international segment offers retail sales of consumer products and subscriptions through internationally focused websites. The Amazon Web Service segment is involved in the global sale of computer, storage, database, and AWS service offerings for startups, enterprises, government agencies, and academic institutions. Okay, now let's look at the banner section of the report. You will notice that the stock is currently trading at, Sri, if you could make it just a little larger, please. There we go, thank you. $3,449. Our 18-month target on the stock is between 28.91 and 55.30 with a 42.10 midpoint. So we believe that, the stock has some room to run in the year ahead, based on its current, valuation and our 18-month outlook. Now let's take a look at our last full-page report, which was published, I believe it was in early May. As you can see in the statistical array, or the center of the report, that includes the financial data, we expect revenues and share earnings for Amazon to advance at a solid clip both this year and in 2022, thanks to continued strong online shopping trends. Now, if we look at the stock, the icing on the cake is that Amazon scores very high on a number of important metrics. As you can see, the safety rank is 1, which is highest. Its timeliness rank is also 1. The financial strength is top-notch at A++. The stock also has solid marks for price stability, which is 80, and price growth persistence, which is 95. The stock also has strong near-term price appreciation potential. As I noted, the timeliness rank is 1, and it also has worthwhile 18-month and 3 to 5 year prospects. Also, we think that Amazon is a strong position, and the stock can form one of the building blocks of a successful portfolio, and is today's one stock to buy right now. We'll now tackle your questions. Please know that we typically can't answer complex questions about specific stocks on the spot. For this, we recommend a review of our latest reports. The first few questions were submitted prior to this presentation. At this point, I'll hand off to the question and answer portion of our presentation to my associate, Charles Moran. Charlie?
Thank you, Alan. My name is Charlie Moran. I'm a senior analyst at Value Line, and I appreciate all questions you have. And I just wanted to go back to the Amazon page. I did receive a question regarding the difference between the Value Line PE multiples that you see along the bottom of the page in the middle, what the NMF stood for, and why sometimes there are numbers that exceed 50 and sometimes NMF is there. I think it's probably wise to point out that in a high-flying stock like Amazon, you want to have a point of comparison with regard to the average annual PE ratio. As you can see, as we brought it out, in 2020, the average PE was 64. Prior to that, it was 77. Typically, when it's very excessive and over 100, you'll see NMF in a high-flying stock like this. In more value-oriented stocks, 50 is the cutoff where you'll see NMF, so we don't have incredibly large numbers, but that is the designation NMF, and that's why you see it when the PE multiple exceeds 50. Let's see, what other questions did we have? There was another question that we received earlier about the number of stocks in the Value Line investment survey, and if that was dynamic and how it changed. And basically, we have 1,700 stocks in the survey, and due to IPOs and spinoffs, you will have a lot of additions and deletions. There's no set criteria. We try to find those that are interested, that have a lot of volume and that our subscribers would be interested in, but there's no strict criteria for the stocks that we have in the investment survey. Let's see, looking over some of more of the questions. There was another question regarding the technical ratio or the technical rank being 4, and it was lowered in April. And I guess it's Steve had the question that he wondered if that indicated a relatively low short-term appreciation potential. I guess the best way to answer that would be to say that the technical rank is calculated in a separate manner than the timeliness rank. The timeliness rank is a function of earnings and stock price appreciation. So the fact that you see a relatively low short-term ranking for technical, that is independent of the timeliness rank. And it's calculated, as I said, based on the quantitative measures unique to Value Line. Let's see. I haven't seen a lot of questions apart from those. There was another question regarding the asking about Value Line having a screen or a ranking system for those stocks that have been added to the 1700 number investment survey. And actually, we do not keep that calculation for subscribers. And finally, there was a question regarding the Biden presidency and labor and the issue of the Teamsters today. Again, I think that's a good place to point out that there is, how should I say it, the opinion of the analyst will take into account these items as they come across the newswire. At the time of this report, if you can scroll back to the price report, or the stock report, Sharif, none of the issues regarding labor had come to pass. This was on May 7th that Brian wrote the report. Again, that would be something that he would have to include in his analysis going forward. But that is really, a function of his view as the analyst on Amazon. Also, his earnings per share will be affected by that potentially, and all the other fundamental factors that go into the report. And those are adjusted, as Alan mentioned, we will issue supplementary reports if there is meaningful news on the stock. Apart from that, I don't see any more questions. If I could throw it back to Alan. Elliot, Alan, are you there?
Thank you, Charlie. Yes, thank you. I actually just saw one interesting question that caught my eye, which I don't think we've addressed over our webinar time together. Someone asked how often the 18-month target price range is updated, and that's updated at least on a quarterly basis every time we update the stock, the Value Line report, which is quarterly for the 1,700 or so stocks that are in our survey. We update the 18-month TPR and the 3 to 5 year TPR. And as noted earlier, if there's anything noteworthy between quarterly reports, we will publish a supplementary report on the company. So to answer that question about the 18-month TPR, that's updated on a quarterly basis, as well as a lot of our other metrics. Thank you. That question caught my eye. Sharif or Charlie, do you have anything else?
There was another question, just one by Kent that I just saw, asking about a deflationary outlook that I guess he is assessing, and wondering how Amazon will perform. And I thought that might be a good question to point out again. When the analyst writes up his report, any economic outlook that he has will incorporate the view of Harvey Katz, the economist of Eyeline, but there is no kind of overarching definitive outlook that he has to abide by or adhere to, other than Harvey's opinion on the matter. So in terms of the deflationary outlook for Amazon, there's really no way to say how Brian views that necessarily. Going back to questions, I really don't see any more.
Okay, thank you, Charlie. With that, we'll send it back to Elliot.
Thank you for attending today's webinar. In order to close out of the webinar, you just need to simply click the red X at the upper right-hand corner of the screen, and the recording will be sent over to the presenters as soon as it is ready. We do thank you for your patience and for attending today's webinar.